so here we go with this objective slide. Attendees will be able to explain the quarterly financial statement updates. No test, though, at least here. Their purposes and the key points to remember about this. The benefit is for better financial performance management through better financial tools. Michael, can you accept the people that are coming on also? Okay, so on this first slide, let's see. Michael will explain these, the updates we made.
I just also forgot about the mute on the microphone, so I'm in good company today. Or at least Mike is. So first we'll go over what's changed. The asset section has had a line added for accounts receivable. We've noticed over the last year that quite often when we've had follow-ups, it's been because of a decline in cash. And we found out, well, yeah, we have a lot of accounts receivable. There was a delay in a grant payment. Having this will, or at least should, reduce how often we need to bother you for follow-ups. You could click for the next change, Mike. And next up is a similar. We've added a separate line for loans, bonds, payroll protection plan, and line draws. Again, that was a common thing we had to do follow-ups on. Hopefully by having this separate, we're not going to need to follow up with you as often. And the next change, please, Mike. And finally, we have slightly rearranged how we're doing the your revenue reporting. We are now asking for PCFP revenue to be reported completely separate on its own, and then a separate line for all other revenues, grants, etc. We want this information to better evaluate the impact that the PCFP is having on our schools as we go forward, especially being mindful of the fact that ESSER revenue is going to end in 2 years. So knowing what the state funding is doing is going to be pretty critical for knowing what position we're in going forward. Next slide, please, Mike.
Okay, let me just weigh in for a minute here,
yeah.
Michael, on this one. Another reason we made this change is that we had some schools reporting and we thought their revenue looked less than their budget. And we asked them about that, and they mentioned that, well, they don't show grants in the revenue. And so we thought it'd be better at least call for the grant so they can put it in, and then we could see what the PCFP revenue is like, but also see what the grant funds are, because I know some of the schools just take it as an offset to expenses. So this way we can at least have a place to capture it.
Yes, thank you, Mike. And are there any questions or comments at this point? Go ahead and either take yourself off mute or go in chat, but I don't see anything. So what's new is a section you'll see in the bottom right of the workbook. We're going to be asking for 3 new numbers. So first, we're asking for your enrolled budget in AG 44. If you could bring that up, Mike, you might want to just go ahead and bring up all 4 points on the slide right now. And also your school budget final, or if you've submitted a amended budget with NDE, the most recent amended budget, the revenue in AG 53 and expense in AG 56. The sheet by default will divide that evenly into quarters for the 4 quarters. You are free to override that, though, if you know that's not an accurate representation. The primary purpose for this is, so over the last year we've been seeing pretty, I want to think of a better way of saying it than wild swings between what's being reported to NDE as the budget and what's being reported on our quarterly financial statement as the budget. And I know that we are well aware that due to the different accounting standards between what we're asking for and what NDE is asking for, that they're not always going to be the same. It might not even be possible for them to be the same, but we are trying to do a better job of reconciling it, since that is something we're now starting to get questions about from NDE, potentially the legislature. So hopefully this will give us that information ahead of the curve instead of having to play catch up. And I'm going to pass it back to Mike for the next slide.
Thank you, Michael. So drilling down into what Michael said a little bit more, now you can see an example of what we're talking about. On that right side, you can see the, let's see, whoops. Okay, you can see the enrollment, for example. Again, we're just calling for the enrollment, the total revenue, and the total expenses from the latter of your final budget or last amended budget to populate these three cells with those items. And then we've got some, you see the numbers, those are the updates that we made to the file to essentially calculate a variance between the budget in the quarterly financial statement and the latter of your financial statement or your amended budget of your final budget or amended budget. And in this case, we're comparing here the fourth quarter year to date. So essentially looking at it as an estimator of the year's full budget. Let's say in this case, they've got a variance of, let's say, 50 or 70. Let's say in the revenue, it could be in the millions, though we're thinking that your fourth quarter, let's say your fourth quarter revenue, year-to-date revenue should approximate or be close to the revenue that you show in your final budget or amended budget. And so if they're significantly off, we might ask about that, because perhaps at the last minute you got some funds that came in, some revenue that came in over and above what you had budgeted for. But we still might ask for that. And the same thing with the expenses. We would hope that the year-to-date budgeted expenses for the fourth quarter would be close to the budget, the expenses you put in your budget for the year. And if they're not, then we might have some questions about that. And adding to what Michael said, we had some times where some of the different quarterly budgets would be exact matches to the actual quarter to date or year to date figures. And so you would have zero variances. And typically that's highly unlikely to the penny that you would have budgeted, 8 months ago or 6 months ago, for that to be that amount. So we thought, well, when we saw that the budgets weren't totaling up to what was submitted, we thought it might be good to do that. So so that's why we've got that. Let me go to the next slide. And what we're looking at is this first light green or light blue column here, the numbers from there to go into the final budget, not the numbers in this total one, because as you can see in this, they can sometimes be quite different. and create some other issues. So let's go to the next slide. And if you want to, this is just an example of where the formulas are pulling to and from. Michael?
Yeah, so the next thing that's new is a small information only section towards the bottom. This is to hopefully give you as well as us a quick dashboard on what your working capital is, as well as some of the per pupil cash amounts and working capital per pupil. Long term, we're hoping to use this data not just in evaluating potentially new applications and amendment to requests, so since those tend to break down to per pupil, but we're hoping that in the future we'll be able to use this to create more levelized means of evaluating schools, since something we have heard feedback on is that it's really not fair that this school with 120 students has the exact same metrics being used against it as a school with 1,200 students. So that our long-term goal is we're hoping we'll be able to start breaking things down a little bit into per pupil so that we can have that more apples to apples comparison between schools. So, and like I said, that's just your quick information only that's been added to the bottom. Are there any questions and comments at this point? It looks like Anna Ausman's raised her hand. If you want to go ahead and unmute.
Hi there. Thank you so much. So I do have a question, more like a clarification, basically, of the report that we currently have. And we just took over this reporting, so correct me if I'm wrong, but I'm looking at the debt to asset ratio that we have in our file, and it seems like it's only computing the non-current liabilities against the total assets. I just want to clarify that that is correct.
That might be that might be an error in the Excel file. I'll definitely make sure to look into the file that's in Epicenter and make sure that didn't slip through the cracks. Thank you for bringing that to our attention, and we'll follow up with everyone here if we find out that that's a mistake in the file.
Thank you so much, Michael.
You're welcome.
Thank you. Good catch. Okay, for this, the last section here, variance explanations. This section is no changes in here. We just wanted to point it out that this is the variance section for one part of this, and this slide, and we're flexible on this. If we notice that some people will add a tab or put their variance explanations in a one or more tabs to the right of this tab. But what we thought we'd try this year is to see if, to make it easier and faster, if we could just go ahead and pop a variance request or questions in the model right here for the assets and liabilities section. And if you look above these columns, you'll see that there's a grouping button. So you can click on that grouping button to toggle open the column or to toggle it closed after the quarter is done. But again, we're looking to ask questions here, like in this case, explain OCA, other current assets increases. Let's say in this other one, explain 40% increase in current liabilities. And as you know, up above these quarter figures, there are also group buttons. So when you click on those, they open up, and then you see the the variance calculations going on, the percentage variance and the dollar variance calculations going on. So any questions or comments so far or suggestions? Okay, well, then just to wrap this up, our goal was that we could explain these things well enough that it give you a good idea of the updates, purposes, key points, and let's see, and then also to convey the benefits of this, better financial performance management through better tools, financial tools. And the final thing is a reminder, we've sent this out. Please be sure to use this. If you've already loaded the model you have, the one that we just sent out last week or the week before, that's fine. Go ahead and use that. If that current ratio has an error, if that formula has an error, we'll send it out and then you can go ahead and use that going forward. But anyway, any final questions or comments? Otherwise, this concludes our remarks.
Hi guys, this is Carlos with Academica. Thank you for putting this together for us. Just wanted to confirm where the recording will be available for viewing.
We will send out a link to it. The process is that we'll get something processed from Teams and then we'll ship it over to Danny, and Danny will go ahead and post it on the web, and then he'll send us the link and then we'll send it out to all of you.
All right, thank you.
Thank you for the question. Any other questions? And I think you all have our contact information because we pelt you with enough questions and comments and statements anyway. So, and when you get the presentation, or if you've already got it in the PowerPoint, in the slide deck, the PDF of this slide deck, there is a link at the ending on the final slide to an indicators of distress in charter schools guide. One last comment though that brings up, one of the things we've been talking with some of the schools about is the ESSER. You may have heard of the coming physical cliff at starting in the 24-25 school year when the ESSER funds end. And so we just are trying to remind schools to make sure you're budgeting accordingly to take into account when those ESSER funds go away and they're not replaced at that time, so that you'll be back to working off of your state funds and your regular federal and local funds. Okay, thank you very much. And this concludes our presentation.
Mike, I did just want to point out, apparently with the most recent update to Teams, we're no longer able to post files in the chat. I've made a note though of everyone who's here. We'll get that PowerPoint emailed out to you.
Great. Thank you very much, Michael. Okay. Goodbye, everybody.